Buying a property off plan is one of the most talked about trends in Ghana's real estate market. Property developers love it because it funds their projects even before they break ground. And some buyers also love it because it feels like getting in early on something big and promising. But here's the truth: buying off plan can either be a smart move or a very expensive mistake. So today we're breaking down the pros and the cons, what to watch out for, what it really means for first-time home buyers and also investors, and also what happens should, or rather when, conflicts arise. I'm Desmond Kafui, and this is Ghana Ground Up. So what's off plan? Well, off plan simply means buying a property before it's completed. And sometimes, as a buyer, all you really have at your disposal are just the architectural drawings, and then this is what you'd probably have to go through to decide whether the property is worth investing in or not. And at other times, it could be maybe just the foundation of the building you're interested in. And sometimes it could even be that construction has started, but then the building is far from ready. In Ghana, it's become a very common model. Why? Well, because many developers rely on off-plan sales to raise money to finish the project. And it's like you're crowdfunding for a future home. And depending on how it's handled, it can be either a win-win situation or a lose-lose. So let's get deeper. Now, let's start with the positives of buying a property off-plan. Now, number one, you get to enjoy a lower entry price. Now, I know that developers will often sometimes reward early buyers with the cheapest prices, but then this doesn't mean that you're getting the property for a ridiculously low price. But then let's say if the intended price of the property is around 500,000 Ghana cedis, as an off-plan buyer, you may get it for around maybe 450,000 or even a bit lower if you drive a hard bargain. And by the time the building is done, it will be definitely worth more. And you'd see that by getting in early, you've logged in a very good deal. Number two, you get to enjoy some flexible payment terms. So instead of paying the full amount upfront, as is often requested when the building is complete, you get to pay in stages as construction progresses. And this definitely eases the pressure on you as the buyer, because in the end, you can end up turning your money around. Now, some buyers may have all the money upfront to pay for the property, but then with a flexible payment plans, you can end up, maybe you can buy some T-bills, or you can invest the money, the money that is due in the times ahead. You can invest that money somewhere and earn some interest without you locking up all the money upfront into the property. Number three, you also get to enjoy some capital appreciation. And capital appreciation simply means that the value of your property will end up increasing over time. So if, let's say, the area you're buying in is a growing area, then by the time the house is completed and handed over to you, your units could be already worth more than what you paid for in the very beginning. Now, this concept of capital appreciation is one of the key ways property investors make money in real estate. Number four, you also end up getting room to make key choices, and you may have room to actually customize your property. Now, depending on the developer you're working with, you may be able to pick your finishes, that is your tiles, some material choices. You can even tweak the layouts a bit. Maybe you can combine adjacent spaces, or you can have some major changes made on the design, or you can even secure the best units in the project even before everyone else does. And it all sounds good, I know, and it actually is. But then, like many things, there's a flip side. Now, looking at the flip side of things, firstly, many projects in Ghana are very notorious for delays. You'd see a project with a promised timeline of about 18 months, easily stretching into maybe 3 or 4 years. And this is not some kind of speculation. It's a fact, and you know it. And I'm sure we've all seen, some projects that never seem to ever get completed. And you see, when projects get delayed unduly, buyers definitely get frustrated, and some end up pulling out and probably demanding their monies back. And I know very well this is not very good for business, but then it makes a segue into the second disadvantage of buying properties off plan, which is the risk of the property failing. Of course, it's a risk of failure, and this is something we must all come to terms with. Now, it's not about being a prophet of doom or anything like that, but generally, I believe that life has taught us that anything that has the capacity to do well also has the inherent potential of failing. So some projects will end up stalling, probably completely, and you have a case where construction grinds to a halt and buyers are left hanging with their monies locked up and properties uncompleted. The third issue that we may need to echo more is actually a mismatch of the end product. Now, you would see the beautiful 3D renders of the project, and they may promise maybe certain features that will really attract you, the buyer. And you may have a case where the developer would say they'll give you marble floors, but then when you move into the property or when it's ready, you realize that you don't have marble floors. You actually have tiles imported from China. Now, I don't mean that products from China are bad, but I'm just saying that maybe if you have someone telling you they're going to give you Spanish marbles and then, marble floors, and then they give you tiles from China, that is not something you would be very happy with as a buyer. Or maybe the developer will end up using maybe cheap materials, and you as a buyer, I mean, you may end up feeling quite shortchanged because you'd feel like you didn't get the value you paid for. And this is actually one of the main reasons why people would rather wait to see a finished house or at least a show house before making a financial commitment to a project. Another big disadvantage could be legal and financial risks. Now, if the developer runs out of money, I mean, definitely you know what that implies. Or if maybe the land title is not clean, you're exposed because as a buyer, there's no way you can claim ownership of something that even the developer cannot prove ownership of. And in many cases, the buyers end up suffering more than the developers because as a developer, you may end up hedging your risks and you may not be affected directly should your project hit a hurdle. But then for the buyer, I mean, definitely you poured your blood and sweat into the property in form of your payment, and any hurdle in the way would be a big blow because many buyers are often working with a smaller pool of money. So what should you look out for if you're considering buying a property off plan? Well, the first thing you need to check is the developer's track record. Have they delivered any project before, or is this going to be their first project? Now, I'm not saying that you should not buy from first-time developers. No. There's a case where some first-time developers may actually end up outperforming the more established ones because they know very well that their future is on the line if they deliver a mediocre project. So they'll end up going all out to give you something really good. I mean, they definitely would want to get it right. But then there are also those who haven't mastered property development and would want to use, their first project to test the waters to see if it will stick. And from those people, I would say run.
Run.
Now, beyond finding out if the developer has, some projects in the past and all that, you also need to find out if those projects were delivered on time. Because, I mean, there's a concept that I stick with, which says seesaw. So what you saw is what you will see, or what you are seeing now is something you probably saw much earlier. I hope it makes sense. Now, secondly, you also need to check the developer's permits and approvals. Now, the fact that you're going to buy a property doesn't mean that you can't get access to the developer's permits. You need to know what you're putting your money into. So don't just take the developer's word for it. Verify with the Lands Commission if everything checks out well, and also with the local authorities to make sure that the permits are right and everything is on course. Now, it may seem like a bit of a bother, but then we're talking about you protecting your money. Now, thirdly, you don't want to lose guard of the sales and the purchase agreement. This is very, very important. Now, it should clearly state the completion timelines. It should state if there are any penalties for delays and what exactly you're getting as a buyer. Now, there are cases where people hurriedly sign these agreements without carefully reviewing the documents, only for them to find out that there were clauses in the document that are not favorable to them. And once you sign, even the law cannot give you the benefits of the doubt because once you've signed, you've agreed to every term that is laid out in there. So you want to do well to get it right. If need be, I would suggest that get a lawyer to help you review the document if you can't do it by yourself. Number 4, how your money or how your payments are handled matters a lot. Because in mature markets, you'd see that off-plan money will normally go into an escrow account where it will be held and only handed over to the developer when the property is ready. But then here in Ghana, that may be a rare case because developers are often relying on the cash flow from the off-plan sales to fund and complete the project. But then it's something that is still worth asking, and you may want to check with the developer if there are some ways for you to protect your money should things go south. And finally, do well to get an independent valuation of the property done. Now, this doesn't imply that you are undermining the value that the developer has placed on the property, but then you need to be sure that what you're getting is actually good value for your money. Because there are times when the so-called off-plan discount may seem like a good deal, but then really it's not a discount after all. Now, if your valuation aligns with that of the property developer, then you can proceed. But then if the property seems sort of overpriced, you may probably want to rethink things, and you can decide what to do, because in the end, it's your money and you will decide how to spend it. For the experienced property investor, they may have a playbook to identify investable projects, but then what's in it for the first-time home buyer? Now, for the first timer, buying off plan can feel like a golden opportunity, but then you may be swayed by the smaller deposits, the flexible payment plans, and the chance to get into maybe a hot location or a prime location. As a first-time buyer, you don't have the cushion of experience. So your number one priority should be the security of the deal. You don't want to gamble with your life savings on a project that has more hype than substance. Don't fall for the hype. Now, if you're in a market and you're new to the market, you need to focus less on the speculative gains and the promises of high returns on your investment, and rather be keen on making sure that you'll actually get the keys to your property. That is, your property will be finished and handed over to you. Now, if you're not sure what to do, I bet you may know some people who have their own houses. Talk to them, seek some counsel, and also be guided, because in the end, wisdom is the principal thing. So get wisdom, and of course, add understanding to protect yourself as a first-time home buyer considering off-plan properties. Now, for investors, off-plan properties can be a great tool to grow your wealth. You can secure a unit at today's price, and by the time the property is ready, you can flip that property for a profit. Or you can hold on to it and maybe rent it out and enjoy some appreciation along the way. But this only works if the numbers are correct. And you'd see a case where many investors have been promised 10% returns on their investments, but then they end up selling for maybe 4 to 7%. That is after things like service charges, vacancies, and also maintenance costs are factored in. And you would see that, there's a lesson to learn here. Now, as an investor, always run your own numbers. Don't just copy what's written in the developer's marketing materials. Run your own numbers and make sure that everything checks out. Then you can proceed and make a well-informed decision. So what happens when things go wrong? Now, the typical disputes here when it comes to off-plan properties normally include endless delays, you have unfinished units, and sometimes you have developers not delivering on their promises. So in order to resolve the issues and the conflicts that arise, you may want to start off with negotiations. And, there are cases where some developers will end up offering you extended payment timelines or even chip in some upgrades to calm you down, because, definitely when there's a conflict, when there's an issue, normally it arises from the side of the developer and not so much on the side of the buyer. Sometimes the buyers are in the wrong by defaulting on their payments and all that. But then in a general case where it comes on the side of the developer, you may want to negotiate. And you may end up walking away with a sweeter deal, because definitely the developer will not want to lose you as the buyer. So it's not really about you being hard at the negotiation table, but then in the end, you're just looking for, some fair grounds so that you're happy and the developer is also happy. Other times, the sales contract or the sales agreement may, or rather should have, mediation or arbitration clauses. So if things go wrong, definitely you have every right to enforce those clauses. But unfortunately, some buyers often hold back from taking legal actions in the name of, oh, I don't, want issues, I don't want trouble, I want my peace of mind, I don't want to fight and all that. But as we know it, The glory is saved up for those who put up a good fight and actually win. And this is your money we're talking about. So don't let it just, slip through your fingers. I mean, we absolutely understand that going to court is often slow, can be expensive and uncertain. And that is why the best protection is often at the beginning when you're expressing interest in the property. And you see, you definitely want to get a solid contract that is vetted preferably by a lawyer before you even end up paying 1 CD for that project. And in cases where you feel like something is not right and maybe your gut tells you to back down from the project, you may want to respect that and just back away. And I know that, I mean, there are times when your gut may be wrong, but then at least you know very well that your money is resting safely in your account. And of course, there will be other opportunities for you to get a good deal in the property market because, I mean, as you can see around you, there is a lot of development going on. In all, buying a property off plan is not bad at all. It can be one of the smartest ways for you to secure property in Ghana, or it could be one of the riskiest ways for you to enter the property market. In the end, no pain, no glory. Now, for first time buyers, it's more about security. And for investors, it's more about realistic numbers. And for everybody, it's about you doing your due diligence to make sure you get it right from the very beginning. So before you end up committing to a property, don't just fall in love with the idea of an outstanding project. Do your checks, protect your money, and go in with your eyes wide open. Because when it comes to off-plan properties, the line between a dream home and a nightmare story is actually thinner than you may think. I'm Desmond Kafui, and this is Ghana Ground Up, 7 new facts and bringing you up to speed with the realities of Ghana's real estate market. If you found value in this episode, do well to subscribe, share it, of course, and let's keep the conversation going. I'll catch you in the next episode.